that we made and I have the dressings on the side. So what I've decided before I toss the salad, I'm gonna also show you the dressings, and you can choose which one you can actually eat. And baked goods, courtesy of Riyadh's lovely wife. She made some banana loaf, chocolate chip muffins, and a few other things, all healthy. And so we're gonna get started because I like this to be on time, and we have a lot of good information happening today. So hello and thank you for coming to our second event in our series. We're gonna be doing 6 events in total this year. And we want to thank again the new Amica, Taunton, and Whitby for giving us this facility and providing all the coffee, tea, and baked goods for right now. This event is to educate you with, all the aspects of, getting into your senior years when it comes to real estate and investing and planning. And so all of our events that we're doing are focused on that for this year, the 6 of them. And we have partnered up with some amazing industry professionals, so we're very excited for you guys to learn from them and to get educated. But before we start, our third event, which is in 2 weeks, is a shredding event happening across the street at Diamond Whitby, a brand new facility where they have storage and they have, office solutions and a ton of things. They also offer shredding. And this event is for your first 2 boxes. If you have, confidential documents that you have in your home that you don't know what to do with, they will shred them for you. We'll cover the cost of the first 2 boxes for you. And then each box after that is $9. So you're saving 30%, DRGroup discount. And again, you can shred as many boxes as you want to that day. It's at May the 10th at Diamond in Whitby across the street. Where are we? Right there? What's that? Send the link after, but again, please sign up. Very limited space, 10 to 12 on May 10th. You just drive into the drive-through, shred your boxes. We'll even give you a certificate once it's been shredded, so you know it's been shredded and it's been properly handled. So again, the event is free. The first 2 boxes are, and then each box after that is under $9. Okay, we also have ballots in the Gibson pub for I've called this a spring/relax basket. Has some wine, has a candle. A gift card provided by Legacy Lending, by Marlene and Dave, and it's to Hot Rocks, which is one of my favorite restaurants. You like Hot Rocks?
I did one of the videos where you talked about how it was your favorite restaurant.
Yeah, I love Hot Rocks, and I grew up going to Hot Rocks. So, all right, so we're just going to go right into the first presenter, and Legacy Lending team. I've written a script here, so give me a moment. I'm very excited about this. Is a family-run, family-focused business. The team is comprised of trusted mortgage agents working to find the best financing solutions for their clients. They have a warm and welcoming approach to each client and they are licensed professionals who are very focused on you. Wish I had a teleprompter like we had on Friday. This team has a combined years of service of 70 plus years, which is crazy in this industry. I'm very excited to welcome up to the stage here, Marlene and Dave. Come on up, guys. So I don't know, like, there you go.
All right, perfect.
We
Thank
should
you.
preface too, it's not just 7 years between the two of us.
Yeah. Good morning, and thank you all for coming today. It's an honor to be here. Can you hear me okay? Probably don't need this. Anyway.
It's for the live stream.
Oh, it's for the live stream, okay, sorry. So we do all types of financing. And I'd like to introduce Dave Stone, who is my son-in-law, by the way. So it is a family business. He's married to my oldest daughter, who is a mortgage specialist. My second daughter is a mortgage agent on our team, and my son Ethan is a mortgage agent also. So we have a lot of fun doing our business.
Good morning, thank you very much. We were joking before, I think I need to invest in a few new suits because it seems like I'm wearing the same one. But thank you very much for having us out. We really very much appreciate it. At the Legacy Lending team, we're very much family focused and client needs are utmost paramount. And we're finding over the last several years, one of the biggest segments in growth and where we're getting the most amount of inquiries is in the reverse mortgage space. So we've been doing this for several years, but we thought who better to bring out and present some content specifically on reverse mortgage by one of our key partners, Becky from CHIP Home Equity Reverse Mortgage. Becky, can you join us up here?
Perfect. Thank you, guys. Hi, my name is Becky Miele, and I'm with Home Equity Bank CHIP Reverse Mortgage. We're the company that you see probably on your telephone with Kurt Browning, or on your television with Kurt Browning, the 1-800 number. But we work with mortgage agents and mortgage brokers across the country. And there's a lot of misconceptions about reverse mortgage, and that's why we're here. We're here to educate you on how you could possibly benefit from the use of reverse mortgage. And of course, you know, the Legacy Group, they're going to be able to guide you into whether it is the best option for you. So we're here to answer any questions. If you have a question, I'm sure the person next to you is probably thinking the same thing. So please don't hesitate to put up your hand. I always really encourage having the conversation so we can better understand what you're thinking and how we could possibly help you. Yeah. So Home Equity Bank, we've been in the business for almost 40 years. We've been doing this a very long time, and what we take pride in is that we know how to deal with people in this older demographic. You know, the 55 plus demographic is the biggest demographic in Canada right now, and there's just not enough money, right? So we're here, but the one thing you do have is you have a house. And there's a lot of equity in your house. So how can we better help you relax and enjoy your retirement than to have to worry about struggling or having to help others? We've been around since 1986. We are a Schedule A bank. And what that means is that we are an RBC, a BMO, a TD. So we are a bank, and a lot of people don't understand that. So this is great. So what that means for you is that you are protected like a bank. So a lot of the misconceptions, and we'll go through a few of the myths, is that, the bank will own my house. Title is always under your name. We're exactly the same as working with a bank. So I want everyone to understand that, that is the case. Everything we do, we provide. You need to have ILA, which is a legal advice. So, you're going to work with your mortgage agents, and you're going to be able to, have the legal advice that, the legal team that you might have worked with in the past, or we can always help you. But they're always going to make sure you're of sound mind and that this is the right decision for you moving forward. No negative guarantee. This is the one where this is, a lot of people, the misconception of reverse mortgage comes from the 2008 crash in the United States. When you're watching CNN and you're seeing people walk down the street because they owe more than what their house is worth. Here at Home Equity Bank, we are very conservative. We will not loan more than 55% of your home. We want you to have equity at the end of the day when you decide to sell your house. So there's a lot of protections put in place just simply because you live in Canada. And because we're a federally regulated bank, we have to follow certain rules in order to make sure those protections are upheld. And there's, reputational risk as well. We take that very seriously. And so there's always a no negative guarantee. So you will never owe more than what your house is worth. Okay, so you're not going to leave behind, debt for your family to have to pay. That's it. So what is a reverse mortgage? So again, some of the myths. So we are a mortgage like you would get at any other bank. We are a payment optional program. So what that means is that you don't have to make payments to us. So the difference between a bank mortgage and a home equity or a reverse mortgage is you don't have to make payments. So it's about cash flow, right? So that is the only difference between the two. If you get a bank or if you get a mortgage with a TD or a BMO and RBC, you have a regular mortgage payment and you make principal payments and you work forward. With a reverse mortgage, we're saying we're okay to get paid in the back end. Yes, interest will accrue because you're not making payments towards it, but it's about putting more cash in your pocket. It's about giving you the availability of being able to kind of live your life and not be cash strapped because you have a mortgage payment hanging over your head. So we are a payment optional program. You can make payments towards a reverse mortgage. However, it's only towards interest, and we do allow you to make a principal payment one time a year. But if we allowed you to make regular payments, it would just be like a traditional mortgage. So there's a little bit of a difference there. We will only give you, again, as I said, up to 55% of what your house is worth. So that is the equity you're looking at, and that is determined by the age, how old you are, where you live in Canada, what's considered a postal code lender, and the value of your home. That is what determines how much you will get from your home. So some of the myths about reverse mortgage. Clients will lose ownership of their home. Incorrect. Title, which has your name on it, remains under your name. So again, like any other traditional mortgage, if you have a partner and it's a matrimonial home, this is very important. We want both of you on title, because if something were to happen to your partner, it's very disruptive to have to worry about, can I afford the house? Do I have to sell the house? Everything stays status quo. You never have to requalify. Once you're in, you're in. You can leave at any time, but you never have to go through the paperwork again unless you decide you want to refinance. So it's a little bit, these are the little bit of the differences between a traditional mortgage and a reverse mortgage. Traditionally, this is probably going to be the last mortgage you ever have, or until you decide to leave it, until you decide to come into, a place like here, right? So you remain with title. We already discussed this. The client will owe more than what your house is worth. Nope. You will only owe if, for whatever reason, something happens in the market, you will only owe what you can sell your house for. That's the worst case scenario. But in most cases, you're not that far off of what you were starting on. So for example, what that means is if you get a mortgage at 65, and in 10 years' time at 75, you decide to leave to come to somewhere like this, the value of your home has gone up in those 10 years. So a lot of the time, you're only not far off of where you were when you started. And those are the illustrations, financial illustrations, your financial advisor and Legacy can show you. And that's where some of the misconceptions are. People forget that your house increases in value. We've discussed this. Your surviving spouse will be stuck. This is one of the things, this is why we insist on putting both people on title at the beginning. If you are 60 and your partner's 80, we're not going to loan you money based on the 80-year-old. We're going to loan you money based on the 60-year-old, because we want to make sure that that 60-year-old can stay in her home for her remaining years, right? Clients can't get a reverse if they have an existing mortgage. That is not true either. We always have to be in first position. So what we find is many people come into retirement and they might have a small mortgage on their house, or whatever, large or small. We would take that over, so we pay out any secured debt, home lines of credit, credit cards, and then we're always in first position. Real estate is one of the few things that is tax-free. So the reason why we created a whole a whole wealth department within Home Equity Bank is because what we're finding is financial advisors are, Canadians are living longer than they've ever lived. And what they're finding is retirement plans they might have done in the 80s, you only thought you might live until 80. But people are in really good health in their later years now. So where are they coming up with that money? In most cases, they're sitting on homes that a lot of them are paid off. And it's a way of being able to, again, maintain your lifestyle and by using your home. Any money you get from your home is tax-free. So instead of having to pull from your investments, you don't get any OAS or CPP clawback if you use equity from your home. That's very important. So real estate is the one thing that you can actually do tax-free. Okay, and we're going to go through some strategies on that a little bit later. We talked of, these are just a few of the points, and you'll be able to contact anyone here in order to get this presentation. But again, payment optional. You're using the equity from your home. All the cash is, all the money you get is tax-free. No requalification down the road, especially if circumstances change. Access up to 55% of your home equity. And the whole point of doing a reverse mortgage is putting the decision back in your hands. It's not the bank saying you need to sell the house, right? Or the real estate agent saying you need to sell the house. It's you deciding when you want to sell the house, right? If you're 65 and money's getting a little bit tight and you're like, I don't know what to do, but I'm not ready yet. I'm not ready yet. You can do something with us that gives you that time that you need in order to make the decision of where you want to be in the future, right? So many people, come to my agents and, they've been told to sell the house because they just don't have the cash flow. It's very disruptive, and I find the older you get, you can only handle certain things sometimes, right? And it takes you longer to make the decisions, and because you want to make the right decision, right? And so what we allow you to do, and that's what, what I'm going to talk about more so is our short-term product, the chip open product, to get your house ready to sell, right? Because a lot of our homes we've been in for 30, 40 years. I've been in my house for 25 years. Everything's breaking down. The windows need to be done. The floors need to be done. This just happened in the last month, So you've been in your house for 40 years. Would you rather sell it for $500,000 or would you rather sell it for $800,000? Right? So let's move on. So it's taking advantage of one of the products we have in order to do that. So we only do reverse mortgage. That's it. We only do reverse mortgage. It's why we're the best at it. Okay? All the banks use us. We are the bank's partner because we're in it for the long haul, right? It's an expensive product to maintain, and that's why there's not very many people in the market, but there are more coming in, and like I just said, it legitimizes what we do. Because it's, if you do a reverse mortgage at 60 and you decide to stay in your home till you're 90, we don't get paid for 30 years, right? So it's a long game. So we have 4 different products, but really 3 because 2 are the same. You know, it's, you can take a lump sum and you can pay out whatever you want to do with it. I mean, they're gonna ask you what you're doing with the money. But you take it as a lump from tax-free. So someone earlier was talking about gifting, and we're gonna talk about that. A lot of people are gifting to the next generation. How it's very difficult to get into the market these days, and we're gonna talk a little bit about that. Income advantage, that's getting monthly supplements. You know, I find most people have financial advisors to help them. So what someone might do is they might take a lump sum and give it to their financial advisor. Their financial advisor is making between 10 and 15%, and you're borrowing at 6%, you're making money, right? And where else can you get $250,000 or $400,000 or whatever that might be, right? So people are trying to use their money to make more money, right? And then that financial advisor might give you a monthly supplement, right? Because some months you might need $1,000, some months you might not need it because you're okay. You know, so it's deciding on how they want to distribute it. The chip open product, this is a product, it's a short-term bridging product. You've probably heard that word bridging when you've done any type of real estate deals. It's a solution where you can get out of the mortgage without very much cost, right? Because whenever you get out of a mortgage, there's a penalty, right? So a chip open, you're paying it up front. And where I find, you know, we're in comparison to, there's a bug up here. We're in comparison to what's called private money. But where we win is that we don't charge service fees, we don't charge broker fees. So it's all those fees that we win at. And then at any time, you can get out of a chip open. So anything short-term, anything under a year is what you're gonna look at. So the chip open product is a perfect product for, you know, you're working with your real estate agent because you know you're gonna sell this year. Right, so like, what month are we in? We're in April. You know, you're not ready yet, but you know, the fall market, I'm going to take advantage of the fall market. So you're going to, where do you have $100,000 lying around? Because you want to do floors and do the furnace and do the roof and whatever. A lot of people don't have $100,000. Someone might say, well, Becky, I'm just going to take from my HELOC, right? A HELOC or my home line of credit. Well, with home lines of credit, you have to make interest payments. You still have to make payments, right? With us, you don't. And not just that, some people don't have a home line of credit on their house. Now you have to qualify for that home line of credit. If you're on a fixed income, which many people are, you're not going to qualify. It's not as easy as it used to be in order to qualify for these products. So if you do something with us, it's just a little bit easier paperwork-wise, because you're not having to qualify. It's mostly solely based on your equity in your home. And then what happens is when you turn around and you decide you want to sell in that fall market, you just pay us back. You've already done the upfront fee, or you know, that's all part of the administration cost, and you walk away. But instead of selling that house for, you know, $500,000, you've sold it for $750,000. Right, so you have an extra $150,000 that you can give to your financial advisor, you can gift to your, you know, grandkids to help get in the market, something like that. So it's a different way of looking at doing what needs to be done. I just did one for a 93-year-old woman right now. A 93-year-old, she's still in her home, and she's looking to leave. Her son with her, she's very good, but her son is talking to her because they want to sell the house and they want to get as much money for the house as possible. She's been in her house for almost 50 years. You know, it needed some work. And that's exactly what they did. They borrowed $300,000. You know, they made some changes, they're doing this and that, and the deal's done. And their plan is to close, like to flip it in about eight months. And, but it was a perfect example. I always find stories tell the example. It was a perfect example of how to use the chip open. Okay. So gifting a down payment, this is very, very popular. I think you were talking earlier, I think I heard the conversation. You know, I have kids who are in their 20s, and then I have more kids who are, I have a lot of kids, and I have more kids that are in university, and I can't help my older kids get into the market because I still have a mortgage and I still have kids to put through school, right? But my parents are, late 70s, and, they're doing okay, and they haven't made that switch yet. But, they're looking at how difficult, like my one kid just took off for Europe to live 6 months because he doesn't want to pay, to live, he can't afford to live in Toronto by himself. So because he can't live by himself, he doesn't want to live in Canada, right? But so like this starts my parents thinking, like, why? Why doesn't he want to live in Canada? Why can't he? Well, Dad, he can't afford to buy a house here. Well, he makes good money. I know he makes good money. Doesn't matter. He doesn't qualify. It's very difficult to qualify, and people don't understand until you have situations, and all of a sudden my parents are like, oh, wait a minute, he makes $80,000 a year. He can't buy a house. Even a small little house. Like, he just can't, right? So this is where, like, well, but maybe I can help him. That would be wonderful, Dad, help him. So these are the things they're putting in place because they're thinking, it's called, generational wealth. They look at me, you have a house, Becky, you don't need the money. Yes, I do, I need the money. But it's true, I have a house, right? My kids don't have houses yet, and they're gonna have a difficult time getting a house. How can my parents help? And then all of a sudden, they see my kids buy a house. And that, the joy they're gonna get from that? Like, it's, so they're putting all these things in place. When they turn this age and whatever, like, they're excited. They're like, and they're gonna be able to get some money, and they're gonna be able to sell the house. And, this is, whether you agree with it or not, it's an option. It's a strategy. You can do it tax-free. So instead of taking from your investments or, if you want to take from your TFSA, that's fine too. There's all different strategies. But why not? My parents, I look at it, inheritance. I don't look at it that that's $100,000 I'm not going to get. I look at it that my kids just got a house, right? Because the equity they will build in their house is worth a lot more than me getting $100,000 at the end of the day. Yes, hon?
Does Lorraine pay tax on the 200,000 you got from Keith?
The gift? The gift?
Did Lorraine pay tax on the $200?
No.
No.
Nope, it's all tax-free. That's the good part.
I give it to them like they don't pay
Yep,
tax?
it's tax-free. Because you're taking it from your home, it's tax-free dollars. If you were to take it from your investments, you're gonna get taxed on it, right? You're gonna get taxed, any investments you take from your RSPs or your RIFs, you're gonna get taxed. The kids are not taxed,
Lorraine doesn't pay any tax.
No.
Only her parents give her money.
no, no,
That's nice option.
yeah.
We see it so often because parents or grandparents want to help out, but they don't want it to negatively impact their
them.
life. This is kind of a solution where they can get them the money available to them. Yes, there's going to be interest accruing on that debt, but they're able to help them out now, as opposed to waiting until they pass. It just kind of gets them in the market.
I get told weekly, my husband works at Walmart as a greeter, and that's fine. He doesn't really want to work, Becky. He doesn't really want to work, but we loaned some money to my son off our HELOC, and we can't afford to pay, we can't afford the payments because they're on a fixed income. That's like I said every day, I'm like, that's a perfect example. Take from your house. Don't borrow it. But, they look at it as there's a risk because there's less money they're giving your kid. Your kid bought a house. It's your money. You're 70. You don't want to be working in Walmart. You want to be on the golf course. Or you know what I mean? Like, you have to do what's right for you. And he might love working in Walmart, and that's fine. But not when the wife is complaining to me that he's never around because we gave money to our son and we couldn't afford to do so, right? So it's just, these are some of the things. But this is, a really great way to help. And this is, again, why financial advisors are getting on board as a strategy. Not everybody, but like as a strategy when someone wants to help. And then they can keep their money in place, right? Okay, next one. Anyone who's ever said, you know, as real estate agents or brokers, anyone who's ever said, you know, they really want to buy an investment property, or they want to buy a cottage for their kid, or a cottage for the family, you know, again, you're going to have a difficult time qualifying when you're on a fixed income. You know, take the money from the house and buy that. I just did a what's called a blanket deal the other day. They already had the cottage. It was only a 3-season cottage. They didn't buy it for very much money, but they took a $400,000 loan out on their home line of credit, and it was killing her. It was killing her. She could not keep up with the payments. So she spoke with her family, and she said, like, look, we've made this 3-season cottage into a 4-season cottage. It's worth like $1.8 million now. Like, it's worth more than her primary home. I can't live like this. I do not have the money to cover the payments that we did in order for us to have a cottage. So we did what's called a blanket, and we covered both properties. We were able to get enough money that there's no more mortgage for her to pay. There's a mortgage, but not one that she has to pay out of pocket. And at the end of the day, you know, God forbid, when she passes, they're going to have this cottage that will be covered, and that they're able to do with it as a, you know, this was a decision they made as a family, right? Investment properties, you know, I have lots of people who, you know, have $1.5, $2 million homes, and they're buying investment properties, and they're taking, you know, that money that they make on rent. They can either give it to us and pay the interest payment, or it's just, you know, it's travel money, right? Because at the end of the day, yeah, you owe us money, but real estate's gone up, right? So you're gonna have more than what you had, right? So it's a really good way of being able to take advantage of buying more properties without actually being out of pocket, right? You can write off those investment payment or rent payments as well. Bridge financing, we spoke about this. I'm going to give you another example of where people use bridging, and I think, well, we might have spoke about this already, is we do a lot of purchases. So what we found is during COVID, a lot of people moved out of the city, right? They wanted to downsize, they wanted to take advantage of the high, you know, selling rates, and so they moved out. But what's happened is now their kids are having kids, and they live in the city, right? And they want to be back in the city because they want to be around their grandkids, but they've kind of been priced out, right? So actually, this has nothing to do with bridging. This is me just talking. So what we're happening is, so for example, if you sell your house for $500, but you want to buy a house for $700, we can put a small chip on that in order to get you back in where you want to be. In regards to bridging, I'll use another example. A client I had in Cambridge, they were selling their house in Cambridge, but they wanted to buy a house in Owen Sound. And so they but they weren't ready to sell their house in Cambridge. So they took advantage of bridging the two. We sold, they were able to buy, and then they were able to sell when they decided they were ready to sell. So we bridged that product without it negatively affecting their finances. And it kind of gave them an idea of how much they need to sell the Cambridge house for as well, right? Proactive downsizing. And this goes along with buying the investment property too. If you're 65, 70, and you know you want to live there, why not buy now? So you're buying at 2025 prices instead of 2030 prices. And you use that money you use that money in the meantime, right? But the proactive downsizing is, again, putting the decision in your hands and figuring out where you want to go. It's, you know, if you can sell your house for $1 million and you can buy for 600, and you decide to give some money to your kids, and you're going to give some money to your financial advisor, and you can do a bunch of different things. You can go wherever you want to go, but the whole point is you are deciding what you want to do. No one's telling you what to do. We're all about, aging with dignity. And again, it doesn't matter what your status is. If you have a home, you're further ahead than a lot of people, right? And you might not make a lot of money because you're only on a fixed income, but you have a house. So there's lots of options there for you that you might not have realized you had, right? So it's, when we say proactive, it's you guys making the decision of where you want to live, when. We're in this beautiful facility right now. Not everyone's going to be able to be here, right? But we can help you, get here, and we can help you make the decisions beforehand. Doing those short-term loans, we can try and get you as much money for your house as you can, right? To help pay for something like this, right? So there's lots and lots of options. In your green bags, there's a brochure there. It's really good. It's, very talking in very layman's terms, gives you examples, facts and myths. Call Dave or Marlene. They have the information, that you might be looking for. Gray divorce. Have you guys heard of this? Gray divorce. It's getting divorced, in your senior years. More and more people are doing it, and I love it. I don't want to say I love divorce, but I love it because people are not being forced to be in a position they think they have to stay in. And men and women, mostly women, sometimes you haven't worked in 25 years, and you are only on a fixed income, and you haven't had a mortgage in 25 or 30 years. And you feel like you're stuck with this man, and vice versa. It goes the other way too, but, it's very scary. It's very scary. And I'm 70, and I feel great, and I want to travel, and I don't need to be with this guy. Yeah, exactly. You don't need to be with him, no. But it's, it's freedom. It's freedom. It's freedom. Yes, exactly. But you're going to live to 100, right? Because people are living longer in good health, right? So it's financial advisors, keeping, there's two scenarios. It's selling the house and dividing up the assets, or it's paying out the spouse, right? And for the financial advisor, it's keeping assets in place and taking from your home rather than, if someone wants to stay within the house, right? But it's a great way, if you sell a house for $1 million, you get five, but you want to buy for 6, we can help you do that without having a mortgage payment. And you have equity in a home, right? So that's the difference. And when you decide to move on, you will have equity in your home. So it's a way of having freedom, financial freedom that you might not otherwise have thought you had. So I want you guys to walk away from here knowing that what you might hear when you're, talking with your friends over coffee or whatever, when they talk about reverse mortgage, you say, no, that's not right. That's not right. The bank doesn't own your home. You own your home. In fact, my dad was on the golf course the other day, and, this guy was talking about how, their mortgage is renewing and there's not enough money and they're going to have to sell them the house. Understand the product either when I first started working there, right? So it's putting the, it's giving you the power to be able to make the decision you want to make. And that's what it comes down to. And I think the last one is healthcare support. If you want to stay in your home as long as possible, and by the way, 80% of people do. They don't want to leave their house. They want to have their nail salon here, their coffee here, their supermarket here. They're comfortable. They're comfortable. They're scared to death of going someplace. This is where we can help you. You'll have the money to pay for landscaping. You'll have the money to shovel your driveway. You'll have the money to bring in someone to clean your house, right? You can choose, just like you can choose to sell your house, you can choose to stay in your home. And we will give you that financial ability, we'll give you that financial freedom and able to do so. And I find since COVID as well, more and more people, this is even more of the case. They're making the decision to stay in their home for as long as possible. So lots to talk about, lots of information here. But I hope you learned some stuff. Does anyone have any questions? Yes.
Question. You mentioned, Becky, that the interest around 6%.
Yep.
So that's the fixed rate interest or variable?
Yeah.
How can you calculate?
Yeah, so we're a little bit different in regard to banking because everything we do, unless it's a chip open product, everything we do is a 5-year term. However, there's only the penalties after 3 years are exactly the same. So we have variable 6 months, 1 year, 3-year terms, 5-year term, like interest terms, but it's actually still a 5-year rate. So I always say just go with the cheapest rate and then try and stay in the product for 3 years and 1 day. Because after 3 years and 1 day, it's only 3 months interest in order to get out of the mortgage.
So how much higher?
So we're about 1.25 higher than a traditional mortgage and like a traditional fixed product. It's not. I'm always going to say, like, because I was a mortgage agent for a short period of time, like, you shouldn't base your decisions solely on interest rate, right? It's the relationship you have with your financial advisor, your mortgage agent. It's, I had a client say to me the other day, I called the bank, they didn't return my call for 3 weeks. Why are you with them? Why aren't you with these guys who are going to return your call in 2 hours? And they'll return your call at, 8 o'clock on a Friday night, there's relationship plays into that as well. But in regards to interest rates, we're a niche product, but we're about 1.5, 1.25 more than a traditional. Yeah.
Thank you.
Yeah. And if you do choose variable, it goes up and down with the market as per usual. Yeah. Anyone else have any questions? Yeah, we're good. I probably went over my time. Okay.
Thank you.
You're welcome. Thank you. Bye.
Thank you, Becky. Thank you, Dave. Thank you, Marlene. They'll be around for the brunch as well, so you can ask your questions then. Next, we've got, I'm going to mess up your last name, Anna. I apologize. I rehearsed it a couple times. We have Anna DRGroup.
Oh my God, you got it.
Wicked. Wicked. I know. I went to school. Yes, Community Relations Director for Amica. And before you speak, Anna, I want to just thank you and your team for this morning, honestly. Great team here, helped set up the room, the Gibson, all the treats and the Gibson are from your team, and thank you for partnering with us on this event. Yeah, we really appreciate it. Here's Anna.
All right. Hey! Hi. So first and foremost, thank you so much for being here today. Thank you to everybody for arranging this great event. Some of you know me, some of you don't. So I'm a community relations director here together with Pauline, my partner. And I'll just have a little bit of time to say what we are, what we do, why people choose us, okay? So Amica Taunton, if there is one thing I would want you to take out of my fast but efficient spiel, okay, is that we do all levels of care throughout life, okay? And you will ask me, Anna, what does it mean for me? Why would that be interesting for me? Because if you ever consider, right, everybody chooses their own path, but if you ever consider to come to, let's say, a place like ours, it's very important to know that in that place, you will never ever have to live again if you don't want to, okay? For example, you're gonna say, oh, Anna, so what do you have? We have independent living, full independent. We have townhomes, apartments, full independent, kitchen, everything there for you to move in. And if you don't even want to come to the building, you don't have to, right? We just do housekeeping and maintenance utilities for you included. In this building, we do independent living, assisted living, and memory care. And I'll tell you more. You're going to ask me, Anna, does it mean that if somebody has more needs from what they used to have when they moved in, they have to move to assisted living floor? I'm going to say no. We can do all levels of care in the same apartment. So the place you move in, it's always forever home if you want it to be, okay? However, there's one exception. If there's some memory questions, right? In that case, sometimes people might need a safe environment to wander around, and we have that too. So basically, I have couples who moved in with us. He or she is on independent living, and a partner is on memory care floor, because that's what they need, okay? And we have people who moved in independent living floor, and then they started needing more care, and we can cater to that. There is nothing we can't do. So this is very important thing when somebody, you or your loved ones will be interested in the places like ours, all right? Do you have 2 minutes more to do the fun part? Okay, thank you. So that was the important part. Now to the fun part. So the fun part that really fascinates me, and I'm coming here myself every day from Newmarket. You're going to say, woo, and I'm going to say, yeah. Why? And the reason being is because this property is Montessori-based project, Montessori research-based. So we took a bunch of research on mature, ladies and gentlemen, lifestyle, and we implemented in this property. So for example, we're the first property, to my knowledge, who opened the pub to the public. Yes, thank you for that. Woohoo! Exactly. Bingo. And why is it beautiful? Because what this study shows, our experience shows, that when people move into property like ours, they start feeling isolated from outside world, right? So how did we tackle this? We're like, okay, we'll bring the world to you. Here's the pub. So the whole community is coming here. It's open 3 days a week, Friday, Saturday, and Sunday, 11:30 a.m. to 7 p.m. Thank you. So you're most welcome. We have Red Seal Chef. The food is phenomenal. Is it the best in the world? Maybe, not necessarily, but it's the best from the senior communities. And I like food. There is a reason why I'm coming here every day from Newmarket, okay? Additional thing, we create a lifestyle. We are focusing heavily on the lifestyle. So when person comes in here, even before person comes in here, and that's the part I love the most, there is a getting to know you form that we want to know if you like your Oreo cookies at 6:15 p.m. in your warm milk dipped with a certain radio station played, we'll do that for you. Why do I like that the most? Because my background is a luxury hospitality, and I'm very familiar with catering to the level of details that makes you feel very special and makes you feel more home than even at home sometimes. And why I'm saying that? Because we all want to be a part of community. If we start, people when I ask me, when is a good time to move? The good time to move is when you stop being physically, mentally, and emotionally engaged in social activities, and or when the house becomes a burden. Why is this a good time to move? Because if we're not socially engaged, what we don't use, we lose. In this case, is our brain. If we're not physically engaged, or if we're not, exercising, going out, or if we're not in a position to take care of our home anymore, it means we're investing our energy, meaning our health, into maintaining the house. And then the question is, what the purpose? And we give the purpose to people here. You have the community, you have the people who care for you, you have friends whom you're socializing. Even before you come in, we learn your personality, learn everything about your personality, and we know whom we're gonna introduce you to become friends with. That part fascinates me. Like, it is amazing. It's like exceptional. And what we truly believe, that no matter which level of life you're at, which stage of life you're at, which level of physical, mental, emotional functioning you're at, you always deserve to have a good life. Our memory care goes out to play bowling. We have children from Montessori school, kindergarten, coming for walks with our memory care floor. And that makes me tear up. I might tear up right now, because this is something. This is humane. This is something that makes us feel good. And that was my favorite part about Amica. Did I fit in the time?
Amazing.
Yeah? Okay. So do you have any questions? Like if you guys want to do a tour, I'm available until 1:30 p.m. today. Okay, at 1:30 I have another tour and then stuff. But if you want to come and see our model apartment, let me know. I'm here and I'm happy to show you around. Okay? Do you have any questions? Because I put a lot of energy on you, but I hope I didn't,
Thank
it
you.
wasn't too much.
Thank you. Thank you.
Thank you.
So as Anna said, from 11:30 on, there are tours available. And again, the facility is amazing. So again, and her passion is insane. So thank you, Anna.
Thank you.
Yes, applause, yes, amazing. Next on our list of presenters, we've got Dan Baker, who is the owner of Profit by Intention and is driven to help people. I've known Dan for how long now, 25 years? I know it's been way too long. And we are the same age, I think, as well, so it's just funny. Dan has worked for major banks, the government, large organizations, but now his sole focus is on financial education, helping people, who are individuals to business owners figure out money. Please welcome Dan Baker. Whose phone is this?
You gonna hook this on me, or
Let's walk around with it. Oh, yeah, you can walk, put it in your pocket.
You know me, I'm not gonna stand behind this thing. All right, who's flipping the slides? You're flipping the slides. All right. Okay. So Will and Ryan always they come to me and they ask me to just speak on a few generalized topics mostly for information purposes. So what they wanted to pick out today was Canada Pension Plan, registered retirement income funds, and insurance. However, if anything doesn't really apply or I'm boring you like crazy, put up your hand, ask some questions, and we can go off on any topic that you want to discuss that's important to you. So is anybody interested in learning about the Canada Pension Plan and how it works?
Is it CPP?
Yeah, CPP.
I'm vaguely interested. I don't know.
Vaguely interested? Okay, we'll go over it relatively quickly, but basically what we're doing is just a basic introduction. I like an interactive presentation. I can't stand just standing up here talking to you. So if you have questions, put up your hand, interrupt, and we'll go from there. All right, you can flip to the next slide. So here's what we do. We do tax planning and preparation. We do wealth and estate planning. We're a fee-for-service financial planning company. So I have worked at major banks. I have worked at Investors Group. I have been at London Life with 2 other insurance companies, and I can tell you their advice all sucks because none of it is geared towards any of you. It's only to make money, right? So everything that they're setting up for, I can give you one example. I won't name the bank, but I thought, well, I'm getting out of the commission sales business, so I'm gonna go work at a bank. It's gonna be better. They just send you the clients and everything will be great. Well, as soon as they roll out a new product, they come to you and they want to see what clients have that much money to invest, and they push you, and your bonuses are related to sliding people into that product, right? So who's that benefiting? Not you, right? It's not me. It's all going to their bottom line because they need to make it good for their shareholders to have all this money into their new fund. So we do it differently. We do a fee for service. We build the financial plan, and then you can go and invest wherever you like. If people invest with us, we have contracts with independent investment companies. Most of them are in Toronto that only do investing. So they don't do mortgages, they don't do insurance, they just stick to investment contracts. And then we do insurance planning. We use life insurance for a lot of different things. Not just for death. For the most part, we use it with business owners to shelter money from taxation, but there's lots of different things that you can do with those policies beyond just having it for when you pass away. The other thing is to know about me, we do things outside the box. So you're never gonna hear a cookie cutter textbook approach to dollar cost average, put the same amount of money away every month. We don't do things like that because those are things that when you come back to see me 10 years from now, you're going to be in the same financial position that you were 10 years ago when we first met. Next slide. Okay, so Canada Pension Plan, CPP. How much you get will depend on the age that you start, how much and how long you've contributed, and your average earnings. Generally, to get the maximum, you've had to work for approximately 40 years between the ages of 18 to 65. Because people will always ask, well, how much am I going to get from CPP? You can find out from the government what you're already tracking to get just by sending in your social insurance number. They'll send you a sheet of paper with what you're on track for. The maximum monthly benefit in 2025 is $1,433 a month. Okay? So the biggest question we get is, should I take CPP benefit at age 60 or wait until age 65? So if you take it at age 60, your benefit decreases by 0.6% for each month, so it's 7.2% per year. The benefit is you're getting the government's money that's basically been taken off of your paycheck your entire career anyway. Advise clients to take it at 60 because A, you don't know if you're going to live to 65, and B, if you take that money, even if you don't need it, you can invest it in something else, earn some tax-free returns, and by the time you get to age 70, 75, you may be further ahead than relying on your Canada pension. 65 is your standard pension, you receive the full CPP pension, and then at age 70, if you delay it, you end up getting an increase of 8.4% per year to your CPP. Okay, so based on current rates, if you take it at age 60, you're getting $917 a month, $1,433 if you start at 65, $2,034 if you start taking it at age 70. So you can see it does have a vast difference depending on how long you wait, but in my book, anytime you can get present value money right away, take it. So the pros of taking your pension at age 60 is you can meet income needs. It's extra money. So if you need the extra cash flow, you can take your CPP early and it'll be one easy step to tap into. If you have a shortened life expectancy, right? A lot of people have all these hopes and dreams and then they retire and then they pass away. I had a client at the bank one time. She had $400 and some odd thousand saved up with her husband. Her husband passed away as soon as he retired. Now she didn't want to travel anymore. So it took a lot of convincing to convince her to use that money to take her grandkids on trips, right? But you never know what's going to happen. So the earlier you can take money, the better off you're likely going to be. And if you're no longer working, if you retire at age 60, I'm going to skip this one because it gets complicated. You get to drop a certain number of years from their calculation, so it will actually increase how much you get. But that's complicated. Go to the next one. The opportunity cost of investments. So if you take your CP early, you can invest the money. So if your RRSPs are down, instead of tapping into them and causing and taking the money out when they're in a loss position, you now can use your CPP early and use that money and give your investments a chance to recover. You can also invest them and try to earn a higher rate of return than what you're going to get having the government's invested Canada pension. And then the last one is considering your guaranteed income supplement eligibility. So if you're going to qualify for the GIS and other income tested retirement benefits, it might make sense to take your CPP early. Because it's at a lower amount, you'll still qualify for those supplements. The retirement plan, sometimes when we do a retirement plan, we put all the numbers into all the fun computer software. It comes out that it's just beneficial for certain people to take it at age 60. And then the last one is if you want to keep working. If you want to keep contributing to the plan, you can still contribute to CPP if you're working past age 60, which will give you the early retirement benefits, which will increase what you can receive. The cons are your lower lifetime benefits and then longevity. So if you live past 74, you're basically going past the break-even point if you're getting a reasonable investment return. You're losing out on the guaranteed return, so you're guaranteed to make the 77.2% return when you take CPP at age 65. Not every investment company can match those returns on an annualized basis. And if you wait to age 70, you're going to get a 42% increase in benefits. But I can tell you in all the years of working in the industry, I don't think I know anybody that waited till age 70 to take Canada pension. Okay. This is just an example. So a retiree who collects CPP at 60 will have already received $38,400 by age 65 and $76,800 by age 70. We can skip this one. This is just an example. Does anybody have any questions about Canada pension? I went over that relatively quickly.
Quick.
Yep.
Is it sustainable? Sometimes I hear that the government doesn't have the money. And,
Of course it's sustainable. They bump it up every year, so we have to pay more into it. Yeah. Right? Like if you look back to 2017, how much they were taking off a paycheck for CPP, it's like tripled. I know, because I run a business, so every time I have to hire somebody and they bump up the rates, we end up getting dinged because we have to pay both halves of CPP. All right.
Any tax benefits or disadvantages to taking out at 60 versus 65?
No, Canada Pension is fully taxable, so anything the government gives you, 9 times out of 10 is going to be taxable. Right? So they give you that money and then they're going to take tax off of it. And what ends up happening is most seniors don't know that, so they get the CPP and old age security, but they don't get tax taken off. So then we do their tax return and they owe money and then they start yelling at me. Right?
This might be a silly question, I don't know.
Never.
But what,
I've known Will for 20 years. There is no such thing as a silly question.
so, I mean, this just use very brief overview. What if I'm self-employed, so there's nothing, do I just do it myself?
Nope, so self-employed people, you still contribute to CPP. It just happens on your tax return.
Oh,
So on your personal tax return, like I did one yesterday,
cool.
so this person owed $12,000 in tax, but really almost $7,000 of it was Canada Pension.
Interesting.
Yeah, and you pay both sides, so you have to pay double.
Such a treat.
Yes.
Cool.
The government always gets you, and what really bothers me is that they don't give you a choice. See, I don't contribute to CPP. I take dividends out of my company, right? Because I want to take that money, not pay tax on it, and then I can invest it, and I'm not going to rely on Canada Pension to fund my retirement. But most people, if you have a regular job, you don't get the choice. It's just automatically deducted from your paycheck. No problem. Okay, the next topic they wanted to discuss were registered retirement savings plans and how they work. So we'll go over this one a little bit more because this one, a lot of people don't understand the tax implications of registered product because, okay, I'll go over quickly kind of what they are. So a registered retirement savings plan, who here has RSPs? Everybody does, of course, because that's what everybody gets brainwashed into because you see commercial after commercial for them. So they're not an actual product. All they are is a government stamp that says this is registered money, so we're going to let you defer the tax on it until you withdraw it at some point down the road where they set the limit and you end up having to withdraw income from it. So the benefits of these are you do get tax deferred growth. So your money will grow within the investment without being taxed on an annualized basis. And you will get a tax refund if you have RRSP room to contribute. And a tax refund is just them giving you back your own money. All right? A lot of people don't get that. They're like, I can't wait for my refund. I'm like, it's just your money. You overpaid them throughout the year. The government's used it, and now they're giving it back to you. Right? So that's all an RRSP is doing is you're taking money, they're giving you a deduction, they're reducing the amount of tax because they're going to give it to you today because they know that they are going to make 10 times that amount on death. And that's the part that you never hear on the commercials that flood the airwaves in January and February. Right? It's always, you still have time to make your RSP, you still have time to make your RSP, get your refund. They never say, get your RSP on death, it goes on your tax return in one lump sum and we're taking half of it. Right? They leave that part out of all the advertising. So that's why I'm not a fan. It says at the bottom. For some people, they work, but if you can generate any type of real wealth, RRSPs for me are not your best way to go. So a RIF is just an RRSP that you have to turn into an income producing product before December 31st of the year you turn 71. So it's basically the exact same investment. You hold the same investments. It's just a mechanism to now turn it into an income producer for you. So the first decision that you have to make is how much income do you want to pull out? There's a minimum that the government sets that you have to withdraw because they want their tax money back that they've already given to you all the years that you were contributing. So for maximum tax deferral, you want to take as little out of your RIF as possible. So get this. So you spend your whole lifetime building up your RRSPs, but in order for it to really benefit you, you want to take out as little as possible, right? Because everything that you take out is now taxed as regular income. And so the other thing that you lose is you lose the tax form of the investment that you hold. So for example, if I buy Apple today in a non-registered investment and I buy $100,000 of Apple and it grows to $200,000. If I cash that out, I'm taxed on capital gains of $100,000, $50,000 goes on my tax return and I'm taxed at the capital gains rates. If I have it in an RSP, my 100,000 goes to 200,000 and I withdraw $200,000, that is taxed in full as $200,000 of regular interest income. Right? So I don't get the tax advantage of having that type of investment in my RSP. Same with dividends. So that's one of the reasons that this product also results in much higher taxation than if you just paid the tax on an annual basis, invested the money in a non-registered product, and then you can use it for whatever you want. So these are how they calculate it. So if you're 65, your minimum withdrawal is 1 divided by 90 minus 65, it's 4%. And then it changes year after year, and it's a function of your age and the amount of money that's left in the investment account. They do take withholding taxes on withdrawals. They take 10% up to $5,000, 20% on withdrawals between $5,000 and $15,000, and 30% on amounts over $15,000. So here's another thing. If you take a significant amount of money out of a RIF, if you go over 15, you're probably pretty good. But even if you take $5,000, the minimum tax rate in Canada is 15%. So you're always going to be low on the tax side. So what it does, it ends up resulting in more income tax owing at the end of the year. So you can't contribute to a RIF, but you can have as many RIFs as you want. So you can have a RIF at TD Bank, Scotiabank, RBC. You can have as many of them as you like. Each one will have a minimum based on its own guidelines, and there's no limits to them. So on debt, the RIF can roll over to a spouse tax-free, and the amount of investment flexibility is large. You can basically invest in anything and have it covered as a RIF plan. The negatives: on the death of both spouses, the full amount of the remaining RIF is included in your income in the year of death and taxed prior to your beneficiaries getting it. So you've spent your whole working life building up a $500,000 RSP. It rolls into a RIF. You and your husband get hit by a bus. You've got 3 kids. That money, your income for that tax year is $500,000, right? So this is, again, the government is more than happy to give you, if you make a $10,000 contribution today, they'll give you your $3,000 refund, because they know eventually people that build up large RSPs, on the death of both spouses, they're going to get their money. I had a client last year, passed away in September. He had $318,000, 4 kids. He paid $117,000 in tax to the government. Right? And that gets paid before that money goes to your beneficiaries. And then, as I went over, the investments that you choose lose their tax-preferred tax treatment. The capital gains, dividends, everything's just taxed as regular income.
You have to be in a RIF though?
An RSP has to turn to a RIF, and before you turn the end of the year, you do 71. Like my aunt just did it, and they actually roll it for you if you don't do it. They just open up a RIF account and move the money. So, does anybody have questions about RIFs? And do you hate them as much as I do?
Somebody suggested to me, and I don't even know if this is a strategy, but if you're taking money out of an RSP, can you convert it to a RIF and start withdrawing? Is there an advantage to that?
So you have an RSP.
Yep.
You want to open a RIF
Not sure.
and start withdrawing.
Like if you're
The advantage of
regular withdrawals out of an RSP and paying the withholding tax, is there any advantage to converting it to a RIF early?
Well, so with the so if you're, depending on the company, so if you're regularly withdrawing from an RSP, they should be taking the maximum withholding tax. See, a lot of people will do it. They'll take 5,000 this time, 5,000 next time, so they only withhold 10,000 or the 10%. If you're at like a major bank, they will spot that, and then they'll start withholding 30% even on your $5,000 withdrawal. So then it's beneficial to have a RIF. So anytime you're going to start doing regular withdrawals, you're better off converting it to a RIF.
So what's the difference between a RIF and a LIF? Because there's a LIF too, isn't it?
Yeah, so a LIF is a life income fund, somewhat similar. It's just for pension money. So if you're working at a job and you have a pension plan and you want to pull that pension plan, it will go into a LIF. So it's a locked-in fund. So those you can't take until 55, and then there are different rules around those as to how much you can withdraw, because they're meant to act like a pension plan.
So the LIF is from your work pension and RIF is from the RSP?
Correct. All right, nothing else? All right. So the third topic that they wanted us to cover were insurance types. So there's a lot of negative connotation about insurance products in the industry. I love them. They are one of my absolute favorites because there's so much that you can do with it if you understand how the product actually works. So you've got 3 different types. You've got term insurance, whole life insurance, universal life. Does everybody know the 3 different types of insurance? No? Okay, we'll go over it real quick here. So term insurance covers you for a set amount of time, 10, 20, 30 years. The premiums increase at renewal and they eventually become extremely high. So typically you will use a term policy to cover off, let's say, a mortgage. You might cover off your kid's education. If the income between spouses is really different, you might have it to cover off of an income loss. But you can get a lot of insurance for a really inexpensive premium. But you're renting, right? If you don't die, that policy expires and you've paid into it and you've never used it. So they're relatively inexpensive and they can be converted to a permanent policy in the future without medical evidence. Universal life insurance, this one's sort of a hybrid. So it's permanent insurance, but it's kind of like a hybrid between life and term. So you have to pay a premium for the net cost of the insurance, which is generally lower than a regular whole life plan. But if you overfund it, you can put the excess into investment accounts that will grow with you. And on death, you get the death benefit plus the value of your investment accounts. And then we have whole life insurance. So this is permanent insurance that covers you until death. The premiums are guaranteed and the policies build an internal cash value that can be used. Policy loans are available on them. They're great for estate preservation and equalization. So for example, if one child wants to take over the family business and the second child doesn't, you can use the insurance to pay out the cash to be able to buy that other child out, and you've equalized your estate. It's great for capital gains on a family cottage. A lot of people don't realize family cottage does not pass down to your children. So on death, capital gains have to be paid. So they have 2 choices. They can find out where the money's going to come from. They can remortgage the property if there isn't a mortgage on it, or they can use insurance to pay it, or the kids have to sell it, which a lot of people don't want to have happen to a family cottage that may have been in their family for decades. And then what we use it for, you can also use it to run as a family bank to build multi-generational wealth building. And that's the part of permanent insurance that most people don't understand. But you can really use it to build up significant wealth for yourself and for future generations. So to do that, we use dividend paying whole life insurance. So basically you're using a whole life dividend paying policy, which will increase your savings and pass on your money tax-free at death. There are numerous benefits to taking out a full life policy. It will build cash value to borrow against using loans during your lifetime. The loans are fully tax-free, and you can use the money for whatever you want, and technically you never have to pay them back. The death benefit is paid out tax-free to your beneficiaries, and the biggest one that this allows you to do that none of your other investment opportunities do is you keep control over your money. So, for example, if you put your money into the bank, they take that money, and with our fractional reserve banking system, they lend that money back out to other people. So I got news for you. If everybody went to the bank today and you wanted to take your money out and you wanted to take your money out, they wouldn't have it, right? It's not there because they only need to keep 10% on reserve. So if you put in $100,000, they can now loan out $900,000 more. That's how inflation happens. They lend out an extra $900,000. Now there's more money in the system. That's just paper money that they created, and everything goes up in price eventually, right? So here you get to keep control over your money because that money is put away just for you. The disadvantage is that it can be expensive. It takes a few years to build the cash values up, and you have to be in good health to be able to qualify for the policy. So who are these for? They're for anybody who wants to keep control over their money and essentially wants to become their own bank. Now, you're obviously not physically becoming your own bank, but I use it basically to finance my entire lifestyle. So it's parents buying for kids. Like I've got policies on me, my company owns one. I've got one on each of my kids, and I'm teaching them, they're 12 and 7, I am teaching them how I do it, so when they get to my age, they may never need to go to a bank for a mortgage. They'll be able to take it and use the policy to fund their own mortgage. Okay, so I'm just going to end with, does anybody have any questions on that?
I have a question about term insurance.
Yeah.
Term insurance is bad too, like the ref. Anyway, like I pay jack up the
Premium.
the premium every year, almost $500 dollars, right? And it ends at age 85, like no more coverage.
Right.
Is that a standard thing?
Oh yeah. Term insurance, you're just borrowing it, right? You're covering off a large amount of money for a short period of time. It's not meant to cover you to age 85. That's what that type of a policy is there to do. That one, like a permanent policy, will cover you until, I think it's age, some companies go to age 120, right? So they'll cover you, they will pay out. A term policy, you're just using that to, but the premium difference is also very significant, right?
85 is standard, right, for term insurance.
Yeah.
Thank you.
That's right, and the whole life, do the premiums stay the same based on your age?
Premiums stay the same. So as soon as you buy a whole life policy, it stays the same. So I'm going to give you an example on how I use this, okay? Because I just did this. So, and I can't even take credit for this because it was one of my business owners that taught me this. He's a gym owner and he puts $40,000 a year into one of these policies and uses it to finance operations. So then I got interested in it. I started researching it. I read a bunch of books on the subject and I was like, this is too good to be true. So then I started doing it. And so car purchase, okay? So normally when you go to buy a car, you walk into the dealership, you go to, they're gonna say, yep, it's 5.99% financing. You're gonna make your car payment to the dealership. Who's making the money? The dealership. So with this, when I go to buy my car, I'm gonna walk into the dealership and I'm gonna say, how much is this car? They're gonna say it's $40,000, let's say. What's the interest rate? I will get their financed amount. Then I'm gonna go back to my insurance policy, which at that point in time should have $40,000, $50,000, $60,000 of cash value, not death benefit, cash value. I will take a policy loan out against it. The policy loan is at much less than what the car company's charging. I'm gonna pay cash for the car to get a smaller discount from it, and I'm making my car payment to my policy. So I'm still paying for my car, but the banking function has now revolved back to me. So over time, and because it's a policy loan, my cash value doesn't stop growing because a policy loan doesn't come out of your cash values of the policy, it comes from the insurance company. They're giving you the loan using your policy as collateral, right? And they don't care if you pay it back. So when my kids want to go to school, they're not going to go to OSAP to get a loan. The money's going to come out of here. And now I can tell them, here's what dad's going to make you pay back into the policy based on their job at the time. So if they can only afford $100 a month, I can set the payback at $100 a month because the insurance company doesn't care. They know that when I die, whatever policy loan is left outstanding gets subtracted from the death benefit. So I can dictate the repayment of my loan. Even better in retirement, so my policy that I bought, when I'm 65, it's projected to be like $410,000 in cash value. So let's say I want to take out $40,000 a year to supplement my retirement income. I can do that through policy loans, pay zero tax on that income, not pay it back, and when I die, if I pull out the full 400, my policy's worth like, I think it's 1.8 million at the time, my kids will get 1.4 million tax-free money instead of 1.8. So sucks to be them, but I've lived tax-free off of that money for the last 10 years. But these are things you can do with insurance policies that most people have no clue about. You had a question. I have them on my kids' names. So I have a holding company that owns my policy that's corporate. Then me and my wife have a policy, and then I have one on each kid. Because kids are great. It's cheap. My son's cost me $3,000 a year. And it's just going to keep growing, and he may never need to buy another insurance policy. Right? But there's cash in there that when he wants to get his first car, when he wants to go to school, he can pull money out. Right? And you constantly use it. A lot of financial planners don't like doing this stuff because this is not one of those things. Like most financial planners, I've dealt with enough of them, they suck. They want to get your money, you'll never hear from them again until you call because they need to supplement their income by finding new clients. When you implement something like this, we have to work at it. This is not something that you buy and you let it be. Right? If you're going to buy a car, you want to use this. If you're going to finance a trip, don't put it on a line of credit. Don't put it on a Visa card. Take the money out of here, then pay that back, right? So you're using this constantly to fund your lifestyle.
So do you find this type of policy is better for someone who are independent business owners?
Anybody that has cash flow that they can afford the premiums.
And
So
when you say afford the premiums, like are they that expensive?
depends. So I'll use myself as an example. My corporate one, I put $20,000 a year into. My kids cost me $3,000. The ones that me and my wife have cost me, see, women are lucky. They're expected to live longer, so hers cost me like $7,000. And then mine costs a little bit more than that.
So that's just like a monthly payment you put towards it.
And you dictate, right? So I set it up based on what I wanted to pay, but you play around with the numbers because what you're doing is overfunding. So there's a certain amount, like my corporate one. I have to pay $7,000 a year to keep the insurance in force, but I can overfund it up to 20. And that's a function that the insurance company lets you pick based on the size of the policy. So if you want to put more money away or you think in the future you're going to have more cash flow, like I think I can go up to 30,000. Right now I'm doing 20, I can go up to 30, right? But my gym owner, he's doing 40. It really depends. It works for business owners. It works for people. Like I have another client, they both work at OPG, right? They have pensions. So they don't want RRSPs because when they pull that out with their pension, they're already paying tons of tax. So instead, you take out a policy like this, you can now access cash tax-free to supplement your retirement, right? So it really works for anybody that wants to do it. It's just there's a policy that fits, right? Like if you said to me, hey, Dan, I'm independently wealthy, I'm gonna put $100,000 a year into a policy, well, it's gonna grow like crazy, right? And then you'll have access to all kinds of stuff to the point where if you have a mortgage, you theoretically could have your mortgage owned inside your policy.
And you can purchase it from your business as business for self. Policy.
So business for self, no, it's in your personal name because you're a sole proprietorship. If you're incorporated, you can buy it in the corporate name, yeah. So the corporation owns it, the corporation is the beneficiary, but then you can pay it back out to yourself tax-free using a capital dividend. So it can get to like your kids and everything else tax-free. Yeah. Lots of things, there's lots of things in this world that people don't know about because here's the other thing. No, you don't see commercials for this because the government doesn't make any money off it, the banks don't make any money off it, so nobody really knows about it. And Will's walking up, so he's gonna kick me off.
I've been told, yes. There's
Okay.
Dan's contact info. I'm not going in your pocket.
No?
No. Not ever.
You
All
go in
right.
my pocket every time you send me an invoice.
That's true. Yes. Thank you, Dan. Dan will be here for brunch, correct? Okay, so you're here for brunch. Good. So if you have any questions for Dan, ask him. He loves to talk. So we've been lucky as a team to partner with Diamond. Diamond Storage. Our clients have benefited greatly from using your services there, Danil. Diamond is more than just storage. They have, Diamond custom kitchen and cabinets, Diamond wine cellar, and more. They have so many different services they provide as a company and Treading as well. Our events on May 10th, 10 to 12 across the street. Wine cellar. In Etobicoke, they have a wine storage facility with face recognition. And you can go in there, store your wine, meet up with friends. They have a bar outside the wine cellar. You can order food and open up your wine and drink it with your friends. It's insane. It's amazing. It's in Etobicoke. So now to say a few words about Diamond. Come on up here.
Appreciate you, man. Thank you so much. You got the slides. Awesome. Thank you. Yeah, Will ruined my presentation talking about the wine cellar. But yeah, it was how I got Riyadh out. I'm like, come for a tequila tasting at my storage facility. It sounds like a kidnapping opportunity. So he said yes anyway, but it was good. I want to say thank you, everybody, for coming out, giving me a few minutes to chat. I'll be really quick. It is actually, it's cool sitting in the back and hearing, Becky speak and Dan and the team kind of talking about what we do here. And I appreciate that you guys took time out of your weekend to come out for a session like this to learn about your different options. And I'm dealing with this right now with my parents, trying to figure out what they want to do going into they've been in retirement, what they want to do with wealth transfer and stuff like that. And it comes down to choices. And I think you guys have made the right choice working with the DRGroup. These gentlemen have done an incredible job in making sure this type of information is available to you. So thank you, Will, Riyadh, Saman, great. Thank you as well, and we'll run through this. I want to show you how we're participating together. So when people think self-storage, what do you normally think? Gravel floors and a chain link fence and sketchy outdoor, garages that are mice infested and stuff like that. You just don't want to be there. We are turning it on its ear in providing you quality, convenience, comfort, in a facility that's designed to make sure that you feel good about putting your stuff away. So what I look at, is how do we get from where you are today into whatever your next stage is. If you're going into a place like Amica, which is beautiful, if you have a chance to do a tour with Anna, it looks really great. But whatever you choose, you're moving from what you know to the unknown, right? And how do you get there? And what do you got to figure out? The biggest part is looking at, well, I would do that, but this part, I don't want to do this part. I don't want to go through, packing and moving and storing and figuring out who gets what. I want to make sure that that is easy for you. So what we do is we take the guesswork out of it. We help out with, the downsizing part of it. If you don't know, Catherine's in here as well. She does an incredible job in making sure that your home is ready to go to that next phase, whatever that may be. And that could be, working with auctioneers, working with donation services, all that stuff. So I heavily promote that. But also look at, what's important to move from your current home. Do your kids really need that, antique buffet and hutch? Do your grandkids actually care about, getting that lazy boy sofa that you've carried for 40 years? Get rid of stuff that you don't need to. If there's items that you want to transfer on, okay, let's look at, maybe storing it. Going to the next slide itself. Next slide. What we do is we take care of all the heavy lifting. As strong as you are, let us take care of it for you. The moment that you look at it's time to go from where we are today to where we need to be, this is where Riyadh and I have been working really well together. They'll call me. I'll get a team organized to pack up your home. And if we're moving it into storage, awesome. If we're moving it to your new home, even better. Let us do the heavy lifting for you. Incredible team that is across Ontario. I've moved people out to New Brunswick, Windsor, even just Oshawa to Oshawa. They just don't want to do the heavy lifting. Let my team take care of that for you. We have an incredible storage facility that we just opened up the Whitby location. I was talking to Will about it earlier, just here at 70 Taunton. And even though we only opened officially July of last year, we're almost at capacity. And that facility could not be built fast enough. I know Becky and I were talking about the one that's coming up in Burlington, beautiful facility, Etobicoke that you talked about earlier, Brampton. Each and every year we'll be adding to, and you think about it, why would you need more storage facilities? It's just, they're on every corner now. It's because people realize, there are certain things that I need to protect, pass on down, or even as I'm moving from my current situation, I just need to put that away so the DRGroup can come in and properly stage the space. They don't need to see my grand piano and they don't need to see my heirloom furniture. Let me get that out of there so that the group can properly stage the space so that when we list it, it looks, modern. And that way it's in storage and we bring it back when you need to. We've got a beautiful store as well. As you're in your new space and you need to get more custom organizational stuff and redecorate your home, we can do that as well. Beautiful store. If you ever have a chance to pop by, tell them you're a friend of Daniel. They'll probably give you a discount, which is great. And incredible time to do some shopping. We're doing some great sales now as well. We also do custom closets, custom kitchens, renovation of your basement. We do it all. The idea is, and what I really like about this is the design element is free. So you sit with one of my design consultants, they'll take measurements, they'll figure out what your inspiration is, they'll figure out what colors you want to use, and they will build a solution that's custom to you. So if you're going from, again, you're coming from a 3 or 4 bedroom home and you're moving into a condo or a reduced size, you're like, okay, well, I lost the room that I had all my clothing in. And I only have like a bar rail now. So bring us into it. We'll build a proper custom solution for you. Everything is designed, built, serviced, installed right here in the GTA. So you know that it's proudly Canadian as well. So many offers that you get as a guest and a friend of the DRGroup and Amica. Whenever someone stores with me, and this is what people really are surprised about, I send a move team to come pack up your items and bring it into storage, and that's completely free. And we offer that to you as well. If you are staying here at the Amica residence in Taunton, we'll also provide a move into the Taunton facility as well, because we're so close, it just makes sense. Free design consult, free invite to the Prime events, which is another sale on all the stuff that's in the store. Happy to do that for you. And I'd say, you know what, just to keep things quick and clear, if you're not sure what to do next, again, you're a part of the greatest team I've ever worked with for real estate. These guys are on point. So if you ever have questions about it, reach out to them. My information's here as well. If you just don't know what to do next when it comes to storage and moving and redesigning that space for you, I'm more than happy to help out with it. Thank you guys once again for coming out. There is in your bag, there's a quick flyer about getting that move-in credit as well. If you have questions, just reach out to me, but I wanted to be really quick with it. Thank you, Will.
Thank you.
No problem.
Are there any questions for Danelle? Any questions for him? Oh, there are. Oh, look. Okay, wow. Look, you can't eat yet.
Yeah. I was like, you wanted to run away. Sorry, I'll start with you.
Is that family owned or?
Yes, so it is Ottawa-based, family-owned, and right now, oh, so sorry, yes, thank you. Right now, we have 11 locations in Ottawa, 4 in Toronto, and we're launching about 3 every year for the next 10 years, so yeah. Go ahead, Catherine.
When is the Ajax location going to be open?
Ajax, yeah, very popular location. Yeah, so we're looking at about 2 years for that. So just to share a little bit of my roadmap, Guelph, we were talking about that. That one's, not Guelph, I keep saying Guelph. Guelph Line, which is Burlington, that one's opening up in June. And then shortly after that, I'll be opening up North York, which is Bermondsey and Eglinton, which is like Victoria Park and Eglinton. Ajax is opening probably in the next 2 years. So before that, I'm opening up Yorkdale, which the DRGroup is very excited about because it's the first of its kind that will have condo living upstairs, so residential apartments, then storage, and then retail businesses on the downstairs. It has our wine club. It has our, we're working on a cigar lounge, but we haven't gotten permits for that as yet. So that's the first of its kind there, yeah. Go ahead.
I heard your facilities temperature control.
Full, yep.
And
Yeah, so temperature control. So again, for us, it's quality and convenience. So full temperature and humidity control. So it's important there so that when we bring your clothing, furniture, that it's protected. I've had guests tell me, you know what, this was the basement couch. It was musty and moldy when we brought it in, and it smells better now when we're taking it out because we took care of it while it was there. $50,000 of content insurance, you don't have to pay anything for that. And 24/7 access, there's no lock fees, there's no admin fees or anything. And because of the partnership with the DRGroup, we help you with a whole bunch of credits to get you in there, yeah. Sorry, go ahead.
Where's the store?
It's right within the facility. So if you go on the ground floor,
Yeah, so when you drive in, before you go home today, just drive in, park your car inside, and walk into the store.
Yeah.
It's amazing.
yeah, we're,
Burlington one will have a store.
we'll have a store as well. So what is really great is the facility is open from 8 a.m. to 9 p.m. You actually drive right into the building, approach the big doors, the doors will go up, you drive in. So if you're packing in heat or sleet or snow, you're never affected by the elements, you're never outside. Come into the Diamond Store, the team is incredible there. They're happy to see you, they'll help you out with moving supplies, organizational items, all of that as well. Sorry, you had a question.
Sorry, your pricing based on cubic feet?
Yeah.
or,
Yeah, square footage, always square footage, right?
footage or-
So a standard 10 by 10, 10 by 20, 5 by 5, whatever you'd like. Ceilings are 9 foot high. Lighting is always there. Music is always playing. We're actually run on solar power. 80% of our power is solar derived. So it allows us to never turn the lights off. I love that part of it because it ensures that those horror movies where you're in the light, but it's dark down there because the company's trying to save money, it's always lit up. So yeah.
Sorry,
That's okay, don't be sorry. I love these.
that is for on a monthly basis or yearly basis?
Monthly basis, we're month to month.
Once a month?
And we're doing a promotion out in Whitby. If you say you're staying for a year, we'll give you 3 months for free as an incentive to come on in. But we're a month-to-month facility. You could leave at any time. Yeah.
Bluetooth, right?
Everything is technology-based. So this is your key, basically. You show up and you approach your unit, you click a button and your door opens for you. So there's no keys to lose. If you say, hey, my son, daughter, or friend has got to grab something from the unit, you just share access with them, and they can open it. You get a notification that, Dave has come in and opened the unit. Okay, perfect, I know he's got his stuff. Will actually listed all of his items that was in his storage unit on Marketplace. So imagine finding a space that's clean, comfortable, neutral,
And safe.
that he could then meet his Marketplace shopper and say, load up your car, get out of here.
I made over $5,000 doing that.
Yeah.
So it was pretty awesome.
Yeah.
And again, if you're a woman, and I'm a big oath of a man, if you're a woman, it's very safe. Right, no issues of doing in a parking lot. You don't give them your home address. You give them the location of the diamond store.
Yeah.
And it's right there.
Yeah.
It's
So they're not coming to your house.
Exactly.
We do safety deposit boxes or security vaults, right? So you could keep your important documents. It's again accessible 24/7. We have mailboxes, so as you're transitioning from one location to another and you need a PO box or something for your business, then you could use it there. And shredding. So Will and team have organized a shredding event May 10th. So if tax season is over for you and you need to destroy some stuff, they'll cover the first 2 boxes. Thank you, team. But bring that in and we'll take care of shredding for you as well. We do a lot. So you'll see in the little folder that it's all there. Yeah, go ahead.
What about real estate staging?
Yep.
You do that?
Yeah, this is where the DRGroup uses a lot of it, so that as soon as you decide to list with them, they'll call me, they'll say, pick up all the stuff from the home, let's put it in a storage unit for 3 months, because that's how long it'll take them to stage it, list it, get it closed, and then you tell me, hey, let's get it back to my house, or let's get it to my new house, whatever you want, we can do that for you as well. Yeah, go
This
ahead.
isn't a question, but if you want to check out the store, I can attest that there's a retail sale going on right now across the street.
There is, yeah, for you guys specifically, yeah.
Instructed to advertise from a mystery
Mystery party, yeah, just to drop notes about the sale happening. We do a couple of great sales, so yeah.
Perfect.
I love the questions, thank you guys, I appreciate
And
it.
Danelle will be here during brunch. That's starting in about 15 minutes. Now we have one of my favorite people on the planet, Simon, my favorite DRGroup member. He's one third of the DRGroup. As a team, we've helped in 3 years, I think 250 families. And Simon joined us last year. His background is in finance, and he's a whiz when it comes to numbers. The smartest guy at the podium right now. Here's Simon.
Awesome. Oops, I dropped something. Thank you, everyone. Thank you for joining us. The 3 of us are the DRGroup, the real estate group in the Durham region, Durham region, that have come together helping families out like yourselves. We'll go to the next slide. So what we do, we obviously, help everyday people with their real estate needs, whether it's buying, leasing, commercial, but, relevant to today's presentation, I'll start right over here. So typically, in the last couple years, we've helped around 8 families do the right sizing move. So that typically for us has been that they're typically moving from a 2-story home because they just don't want to do stairs anymore. The maintenance of the property is just too much, the landscaping and so on, too much to handle. So they're looking to do a right size. Typically going to an assisted living facility or purpose-built apartments. So this could be either, the assisted living facility straightforward is being here. Sometimes they're going into the purpose-built apartments. That could be, from a rental perspective, going to just rent somewhere, or actually purchasing an apartment. We do have Riyadh on our team, who is a specialist when it comes to the pre-construction sector of real estate as well. We're noticing that a new trend has been going into purpose-built apartments. So people are thinking of doing this right-sizing move, but maybe not now. Maybe it's 3 years, 4 years, 5 years down the line. Right now, we're seeing projects pop up in the Durham region where the projected time to finish is 4 or 5 years down the line. So we're getting our clients into some of these apartment buildings where they're purchasing today, slowly making payments. These apartments are ready in 2, 3, 5 years. And at that time, they're able to move into, a living facility where it's 1 floor, all the amenities are there, and so on. So And sorry, when I talk about purpose-built apartments, this could be purchase or it could be lease, okay? There are scenarios where you're not buying, you're just leasing. We help facilitate. So in an example that I'm gonna talk to you about, we were able to, they live in the Ajax community, they wanted to stay in Ajax, and we found them in a purpose-built apartment building in Ajax, where we pretty much made the introduction to the leasing team at that apartment, help them facilitate the transaction, make sure everything's smooth, they're not caught by the paperwork, and we were able to transition them into an apartment, and then we completed the sale of their home. So when it's time to work with the DR group, what we do is our initial meeting is do a market analysis. So typically, we find that the families that we've helped with, they've been living in that home for 20, 25 years plus. They haven't been doing real estate transactions, so the last time they may have purchased, that environment is a lot different than the environment today. So we do a market analysis of their home and kind of tell them, this is your home, this is what it's worth today, this is the process, these are the timelines. We help with minor repairs, cosmetic renovations, declutter, organize, store, as we just spoke about, and assist with moving. So essentially trying to make that process, that move, as smooth as possible. An example that we'll talk about is 21 Hawkins Crescent in Ajax. So this was a home where the homeowners, we had sold another home on the street. They saw our sign, they gave us a call. We initially met them October of 2023. We've been talking to them since October of 2023 until April 2024 when they said, this is the right time, let's do it. They wanted to stay in Ajax. We found them an apartment building that they loved. We helped them secure that apartment building. We helped them move into that apartment building, and now the house was vacant. They weren't living there, and we had essentially the time to go ahead, prepare the house to hit the market. So from the time that we stepped in April, we had a lot of things to do. They were previous antique store owners, and they had a lot of things in their home, as you can imagine. So we essentially found an auction company to come in, take inventory of what they had, price everything out, and begin the sale process. And essentially, once that process was done, we were able to get it on the market, stage it, do everything that we spoke about, paint the entire home, replace the garage doors, install new carpet, professionally clean the house, maintain the front and backyard, so there was no heavy lifting for them, and we were able to execute the sale in June. So what I wanted to kind of point out here was that from the time that we met them in October till the actual sale, it's a long period. And what we wanted to drive home was that we're finding right now that transaction can take months and months. It's not a matter of, doing it within a month or two. The reality is it takes quite a bit of time, and we recommend starting that process early to all our clients. So the process of selling a home, the way we do it is, the one thing I'll say is that when we meet with clients, potential clients, it's not a one meeting and we're done. We're often in and out of their home 5, 6, 7 times before paperwork is actually signed. Okay, so what we do is first we start with a seller's presentation. Our seller's presentation is lengthy, it's 25 pages in length. We bring it to your home, we leave it at your house. It has everything from what we believe your house is worth, the commissions that we charge, our testimonials from past clients, our marketing process, how we advertise your home. It's a very lengthy document that we've prepared, but we believe that you need to have that information in your home that you can read yourself, share with your family, get your opinion. We encourage you to go out and talk to other realtors just so you can compare us to them and see what the value proposition is. And we often do find that we're successful in working with our clients that we go and meet in their home. We also do an in-depth market analysis the day that we meet you and the day that it's time to go to market or weeks prior to going to market, because we want to show you what has happened in the market since the first time that we've met and the present time. We also do a staging consultation. We're bring in our staging consultant, and she essentially goes through the property and makes suggestions on what we need to declutter and what we need to potentially put away. And those are all just suggestions. If we can do it, great. If we can't do it, then we work with the situation that we have at hand. And then when it's time to actually move forward, we have a marketing plan that we present to you. So this is a physical calendar that we print out, give to you, and that calendar will have the present month till when we're going to go to market, and it will have everything such as, when the declutter needs to be completed, when the stager is coming to stage the house, when the coming soon sign is coming on your property, when the lockbox is going to be installed. So everything is in front of you, and it's transparent as possible. we always tell our clients that it's a working document. If we need to make changes, we make changes, and we essentially try and work with your schedule and make sure everything goes as smooth as possible. When it comes to selling your home, some of the additional fees that are involved in the process is the lawyer fee. So we need a lawyer to complete the transaction. And that lawyer fee is anywhere between $1,500 to $2,000 a month plus HST. There's decluttering services if need be, moving services, and cleaning services. When we present to you, there is an option in our commissions package where we take care of all of this for you if you wanted to. It is a transparent process. You'll know exactly what that number is. But if you want to take it on yourself, if you have a lawyer that you know, that you trust, that you want to use, or a lawyer who's been taking care of your estate planning, then you have that option as well. I wanted to quickly do a market update of the present time, just so you can get an understanding of what's happening in the market right now. And all of you should be getting a market update from us for the Durham region. If you've been getting it, great. If not, you will be getting a market update that we tailor every month, a one-pager that kind of summarizes what's going on in the market. I'll briefly talk about what I have here. So my first column, I have the Durham region, and I have the main municipalities: Ajax, Clarington, Oshawa, Pickering, Whitby. What I have here is the median price in February of 2025, the median price in March of 2025, and I've calculated the average change into what's happening in the market. As you can see, a lot of red, a lot of minuses, and what we're noticing is that year over year, prices have come down a little bit, okay? Year over year and month over month, actually. And essentially, the sentiment that we're seeing is that there's a lot of inventory in the market right now, and more inventory, that's your supply. A lot of people have choices in terms of what they want to buy, and as a result of that, plus the interest rate component and the geopolitical issues happening, we're noticing the confidence has been sucked out of the market a little bit right now, hence why we're seeing the price changes. If we can go back, Jasmine. A lot of this could be seasonality as well, because February and March, that's when the spring market begins. So we're excited to see what's going to happen in the month of April. I'll bring you to my next column where we look at year over year numbers. We want to point out that year over year we're lower as well. So last year was a hotter market. So if you're thinking about your home, or if you've had an opinion on your home in let's say the last year, it would be accurate to assume that value has come down a little bit, okay? And the very last column that I have is comparing the Durham region prices from the peak of the market, which was approximately August of 2022 till March of this year. As you may have heard and seen, there was a huge correction in the market from the peak of 2022 till now. The reason why we've put this here is because a lot of people got excited about the peak of the market and realized that their house was worth a lot. And now when it's time to sell, we're having a lot of these conversations. Well, at the peak, my neighbor sold for such amount, and that's what we're expecting. We just like to point out to people that there has been a big correction in the market since then. So we just put it out there just so people are aware. In terms of what's happening in the market right now with buyers, so, I'm just making a safe assumption that this group, you may be in a position where you eventually have to sell, but someone has to purchase your property. So what we're noticing is that a lot of buyers are having the wait and see approach. So they're not typically in a rush right now. They want to see what's happening in the market. They want to see what's happening with interest rates before they make a decision. They want to see what happens with all the trade disputes that are happening. And right now, because there are a lot of homes on the market, typically what will happen is, typically what would happen is, because there's a lot of options, buyers want to take their time and also have conditions. So, during the crazy of the market, you would have heard that people were buying homes without any conditions, short closing periods, and it was a very secure sale. That has changed a little bit right now because there's so much inventory. Buyers are having conditions to essentially make the purchase a bit more secure for them. So it's normal to see a financing and an inspection clause on the sale. Okay, we can go to the next slide. Just a brief overview. I actually want to just take you over here to point number 2. Typically in the Durham region, there's at any given time, there's approximately 900 homes available in the market. Okay, we're in an environment now where there's 2,215 listings currently in the market. Okay, so that is a lot of supply in the market, and that's why prices have stayed corrected and have stayed at the prices that they are right now. Okay, we spoke about most of these. We can go to the next slide. Yeah, that's the end of my presentation. As I mentioned, this report does get prepared on a monthly basis. It's a one-page report that will come to your email. If you enjoy reading about it, please read it. If you don't, just hit delete and the next one will come. Any questions? No? Perfect.
All right. Well, thank you everyone for coming. We are at the end of the formal part. As I said, there are tours now being offered for Amica. We do want to thank Amica, of course, for hosting us here. Isaac, the AV sound extraordinaire, Jasmine, for your support, and all of you guys for coming here today. We are going to be having lunch in the Gibson Pub. There's sandwiches, salads, baked goods. There's a ton of food. So please eat a lot. And we also want to make sure you enter for the draw for the basket that's also in the Gibson Pub. So fill out your ballot. We'll do the draw around at 12:30, I guess 30, almost 12 o'clock. And again, thank you guys for coming. And again, we're all around if you have any questions or comments or want to talk. We are here to listen and to learn. So thank you. Perfect. Awesome. Thank you.